everyone. I hope you guys are having a wonderful day as per usual, and I hope you guys had a wonderful week trading as well. The markets ended the week on a good note, another green week, and I was actually pretty surprised of the recovery that the market staged. So now we are now going on 8 weeks in a row of non-stop pumping action. Although it is starting to actually, I shouldn't say it's starting to slow down because like we actually got a big drop this week, and then we got a very strong recovery in the markets. Although today was like borderline, it was trying to end into the red, but it was the plunge protection team protected everything from going down. But overall, nothing to complain about. The market keeps on churning higher. We are still going to wait for this buying opportunity that could be coming down to the 455 to 460 level here. And again, there's no guarantee that we're going to hit there. But if we do pump to the all-time highs and get rejected, which by the way is like 1.4% away, it's not a tall order, especially in this kind of environment where there's so much euphoria and everyone wants to buy, and there's like no sellers right now, and everyone is buying the dips, right? Because that's the name of the game right now, right? Everyone wants to buy the dips, and the economy is perfect, and that's what we're seeing on CNBC at least. So let's take a look at Market Cipher. We'll take a look at the weekly candle here on the SPY. So again, it's showing us a potential continuation of the wave 5 into an all-time high of around 505 to as high as 600. But my levels that I am looking for is again 510 to 540. Between this area, I do believe that we could have a very nice, target of where we could end this rally and then potentially start a trend change, and then we could start to potentially reverse all of this move. And then this is probably when the economy isn't going to be as rosy as the CNBC and the Fed has been advertising, and everything starts to unravel, and the interest rate damages are going to be shown to the market, and then the market's probably going to undo everything that they bought and sell it in a pretty dramatic fashion. So let's take a look at the weekly here. We actually had another green week. So we had a 3 and a 7, an extension into the momentum waves. No significant top should be put in just yet. The monthly time frame is still looking very bullish on the December candle, and the daily had a red dot, but now we're flipping back into the green. So this pump can continue on. And it's not over, because we could take a look at the 4-hour, and we actually have a very thick green money flow and another green dot to confirm a potential continuation of the trend, right? Looking at the 1-hour, very similar situation. However, you actually have a red dot here, but you still have very thick green money flow. So let's say we get another dip next week. You could even, let's say we put a lower low in, and, we put a higher low on the momentum waves. Then you have a bullish divergence, and you could pump all way back up, and then, put in an all-time high maybe on the S&P 500, which we have yet to do, but maybe we were probably going to do that shortly, given all the other indices have put in an all-time high except for the Russell. But the Dow Jones and the NASDAQ have put in all-time highs here. Let's take a look at the SPY on Wave Edge. So take a look at Wave Edge on the daily time frame. So nothing new here. Let's take a look at the futures. Nothing new there either. Nothing on the window, I believe. So again, nothing new going on in the SPY. But again, it's starting to show potential signs of buyer's exhaustion. So we might get a retrace soon. But again, I don't want to say that too soon, because we said that down here expecting a potential pullback. And look what happened on that CPI news. People just can't get enough of it, and they just want to keep buying. So if they want to keep buying, let them do it, right? Why get in front of it? And then you have these two green crosses that we covered the other day, which resulted into another pump. And now we're getting a red cross, and we're getting a little bit of downwards price action. And the MACD is actually a little bit weak right now. So if we start to cross the zero line, maybe we'll start this pullback that I'm looking to get on the smaller time frames, and then we'll probably get a big buying opportunity into another euphoric melt up on Morgan news, and everything's fine, and nothing. The economy has never been stronger, right? And then you'll pump up to a 510 to 540. Let's take a look here at oil very quickly before I start to cover individual names. So oil has been retesting this level here as resistance for quite a bit of time. Maybe we'll get one more, but if it remains at this level too long, you could start that significant pullback that I've been talking about into a wave 3, which means the 2 is in, and then after that you'll start a whole new cycle lower, which again could even be bullish for the markets. Oil going down, economic weakness, that's so bullish, right? Because that means lower rates. So the market doesn't even care if the economy goes into a recession. All they care about is lower rates. Lower rates is the name of the game right now. And we could go lower and lower and lower in oil into recession levels, depression levels, and I feel like the market will eventually care, but right now they don't, right? So until we get down to maybe these levels, the market may not care at all. And to say that inflation has been won, very quickly, just want to cover this topic. If inflation was really over and the Fed did such a great job, why is gold at $2,053 an ounce, right? If inflation was really won and the Fed did an amazing job and it was back down to where the levels before COVID, then we would see gold back down to essentially, the $1,200 levels. And that's just not the case. Right now, gold is near all-time highs and has made an all-time high because inflation is a bigger problem than ever. And once they do start to do QE next year, we're going to see gold break out past the $2,000 level, and we may very well get to the $2,500 level. And that's going to show immense weakness and loss in credibility into the Fed, and a big drop in the dollar, I suppose, could follow as well, unless they decide to suddenly just raise rates out of nowhere once again to 7-8%. But again, that's going to cause problems of its own. So I wouldn't bet too much on it, but I do see a retrace coming for the yields here. The yields are starting to bottom out and could very well get a pop soon, which could be this drop that we're waiting on the SPY, right? Maybe this pop here on yields before it does a connector and we go lower. This could mean that the yields could drop and then you get a drop in the market, but they start to roll over again with more economic weakness, and then the markets will go higher and bond yields will go lower into a lower low, but we'll find a significant amount of support, most likely right around the 3.7 area. So right around these levels here, you're going to run into massive support on the yields, right? And you might even form a big bullish divergence on the weekly or the daily, sorry. But yeah, that's basically what I wanted to say, because some people keep saying inflation is over and the Fed's done a great job, which they haven't, right? They've done nothing, in my opinion. I don't think they've done enough, right? If anything, they should have just raised rates from 0 to right away 8%, caused the market crash, but resolved the inflation problem. Now markets are higher than ever, right? But we still have a massive inflation problem, which is impacting the livelihood of day-to-day people. Probably not the Wall Street people, but the everyday people are definitely suffering. Anyways, let's move on. We'll take a look at individual names here. So Roku at the moment could be maybe putting in a potential top here in a wave B, which would be a very small wave B, but anything is possible. If this was it, then Roku should be headed back down into C. But what I would like to see more is maybe a bigger bounce back up in Roku, something like this, where it retraces back up to this gap fill that we have here. I believe this is a gap fill on Roku. Yeah, so we do have a bit of a gap fill here. So gap fill at 101. If we could fill that gap before headed down, that would be nice. But again, nothing ever is picture perfect. So we'll take it day by day, and we'll have to see how this one plays out. But the target remains the same for Roku, basically right around this red area support. Then it should be finished, and then we can start to head higher. Okay, whoops, let me just delete that. And then we'll take a look here at SBUX. I believe SBUX had a nice little day today. Let's get on some smaller time frames. So yeah, you're still doing some nice bullish divergence, but this still could be in play. This wave 5, in my opinion, I would like it to come back down to the 93.70 to 91, or sorry, 92 area. After that, you could get a very big reversal back in wave 2, all the way up to the 102.59 area. And again, this might be the pullback that we've been waiting for in the markets, and then Starbucks gets pushed down just a little bit lower, right? Starbucks is not that much of a big mover. I mean, obviously, if you have earnings, it could be a big mover, but normally Starbucks moves maybe like 1 to 3%, something like that, right? It could have some very nice up days right here, 2% there. Sorry, let me get on the daily. Yeah, so like you get like some 2%, 1% days usually. No, you don't usually get 5, 4, 6% days. It's not really a tech stock, but overall, this should be what Starbucks is doing. All right, let's move here and we'll take a look at NVIDIA. So NVIDIA, again, still putting in some red bearish consolidation here. It should start the wave 3, but we'll have to see if this is going to be playing out at all. Because if we do take out this pivot, you need to be open to the idea that another all-time high could be coming for NVIDIA, which would be an extension of the 5th wave. Whoop, that is not what I wanted to do. It would be an extension of the 5th wave here to go to possibly 600 or even 800, right? We could really, you want to see the market get delusional, irrational, you'll see NVIDIA go to these levels, right? Which would be, it would be a sight to see. Let's move on. We'll take a look here at Apple. Apple was actually down once again, and it's now retesting the short area as support. So we'll actually see if we actually bounce back up and make another all-time high. But Apple seems, for some reason, I'm not really following the news or anything, but seems to be a little bit weak. Berkshire Hathaway stock is behind the market. Okay, well, yeah, I know Warren Buffett's been buying this. It's a big holding of his, but not too sure what the news is. But overall, it's past my short area. Still in a swing short here because this is for the longer term, and eventually it'll play out. But right now, Apple seems to be holding up. Let's take a look at maybe one more. We'll cover, I think I did Google the other day. We'll maybe cover Google. Oh yeah, so for Google, I actually did this pattern here very quickly. So it's actually an ABC. Same thing for the market. Google has not made an all-time high, but could be on the verge of making one. As we can see, we actually have a daily breakout here from a down-sloping trend line on the RSI. It could be in breakout mode at any moment now, and could extend this 5th wave higher. Where is this 5th wave going to lead us to? Then we could just do maybe a little bit of a target area. So we could maybe target the 1.618 to the 236. So that could be where Google is headed in the short term. After that, maybe the 5th wave could be finished, and then you could start to head back down, right? And maybe that's going to be the B wave top. All right, let's take a look at nat gas. So natural gas actually had a nice little day today, up 1%. I believe we have taken out the pivot, and yeah, we've taken out the pivot. So maybe we could be on our way to making another high. You have a daily cross on the MACD here on the daily time frame. Looking at the weekly, is obviously looking a little bit bearish, actually, given we've crossed back into it. But overall, on the weekly, it's looking not too bad on terms of candles. You have a nice little bottoming tail here, basically like a doji, and now you have another up day, another up week in nat gas. So that's nice to see. So if nat gas heads back up, this was just like a fake out, then you could head back into this target area that I have right here at $4.76 to $5.40. But again, this is not going to happen in 1 to 2 weeks. This could take months to play out. Let's finally take a look at the small caps and the Russell 2000. And again, the small caps, the Russell 2000, I believe today has made another high. It's taken out its pivot high here. Oh, I actually did that yesterday or the other day, I believe, on this big down candle. So it's taken out its previous pivot and could technically be extending this, because this entire wave 2 is now invalidated, and you have to redraw the count entirely. And this was just a big consolidation for a potential blow off top, maybe in the Russell, and then you'll extend the B wave a little bit higher, but eventually you'll come back down and you'll head down to these levels at 110 to 120. So that should be what's happening to the Russell 2000. So the small caps, everyone's FOMOing into them. But once the reality of the situation sets in probably next year, given like the recession or whatnot's going to happen, I don't know what the catalyst is going to be. My expectation is that it's going to be a recession given where interest rates are. And these small cap companies who are already not profitable or are losing tons of money are going to do even worse, and then you'll see the real implosion in the Russell. Okay, so that's basically it. Let's delete all of these counts that we've had, but overall they were actually accurate counts, except for maybe this ABC. This is if now is no longer an extended C leg, and we have to do it as a WXI or an ABC towards the downside. Okay. So that's basically it. Don't really have much to add today. If you guys enjoy the content, feel free to leave a like in the description. Well, actually, maybe we'll talk about the VIX very quickly. So the VIX, the reason the VIX got a big spike the other day as well, lots of puts on the VIX. There were lots of puts on the VIX. Too many people are in the money on these puts, and they had to stop some out and delete some off the market and make them expire worthless, because they're also going to pay out too much. And usually when the market is pumping so much, what fund managers will do to hedge usually is buy VIX put options, right? And what essentially happened now is they gotta, instead of being too long, they like the long as well. They just buy puts on volatility, and then volatility will keep going down. But eventually, there's too many of them in the money, and they just got to stop them out. So that's essentially what happened. We got a big drop the other day, completely recovered now. But this was just a big spike in the VIX, and now it should be retracing back down. As we can tell, the volatility products are slowly imploding once again. All right, that does it about for me. Hopefully you guys have a happy holiday and a wonderful weekend. I'm going to be going on vacation. I'll be bringing my laptop. Be doing a little bit less updates. I believe the markets should be very quiet throughout the holidays, so I'll probably see you guys in a couple of days. I'll probably still do some videos, but happy holidays and Merry Christmas to everyone. Peace.